Welcome to the 15-Minute Financial Feast podcast, bringing you 15-minute segments to help you retire with purpose on time. We're serving up food for thought and bread for the head. Are you hungry to learn? Here are your hosts, Mark Triplett and Troy Westendorf.
The end of the year is fast approaching, which means it's a great time to start thinking about financial strategies. Joining us now is Mark Triplett with Triplett-Westendorf Financial Group to talk about what you need to be doing to lower your tax liability. Mark, welcome. Why should people be thinking about tax strategies during the holiday season?
Larissa, thanks for having me this morning. So tax planning is really a year-round ordeal, but this time of year, a lot of folks are thinking about tax strategies because a lot of them are tied to the calendar year, and we're coming up on that deadline of December 31st to take action on some of those areas. Now, money strategies, particularly tax strategies, can be a challenge for a lot of folks to get their arms around. We strive really at our firm to try to break this down to ways that folks can use their fourth grade math skills to make a determination about whether they should take action or not take action when it comes to tax planning.
Yeah, I certainly need those fourth grade math skills as well. Are there any changes we should be mindful of as we prepare to file our taxes for 2022?
Yeah, I'd say this year there are less changes than in previous years and maybe in years to come, but there are still changes nevertheless. There always are. A couple of notable ones. Last year there was an above-the-line tax deduction that you could make for charitable giving of $300 up to $300. That's gone for this year. You can still give to charity, don't get me wrong, but the folks that filed a standard deduction last year had another strategy they could use. That's gone this year. Tax brackets and standard deductions have also been adjusted for inflation this year. They will be next year too, and be some pretty significant changes next year. And then if you're receiving third-party payment from payment networks like Venmo, PayPal, and you received over $600 in receipts, you're going to get a 1099-K. You're going to have to file with the IRS this year that you didn't in the past years. So that's going to be a big change for a lot of folks too.
It certainly will. And what kind of strategies should be used to decrease our tax liability?
So some of my favorite strategies to use, number one, would be utilizing Roth conversions. We tend to do a lot of these every year towards the end of the year, but this year the market has given us a little bit of a treat. Sometimes when the market gives us lemons, we make lemonade, and right now with market values being down, if you have an IRA that is invested in the market and your assets are suppressed because of the downturn in the market, this might be a good time to actually convert some of those assets at lower prices and get a little bit of a discount on your future tax liability by converting assets while they're depressed. When they come back later on, they're now in a never taxed account, and that could be a really smart strategy to do before the end of the year. And we like to see folks basically stuffing their brackets, or we call it bracket stuffing. If you're in a 12% bracket and before you hit the next 22% bracket, you got $10,000 worth of income, you could do $10,000 worth of Roth conversions potentially and not cross over that threshold. So, being mindful there is great. Also, bunching donations. If you're going to make charitable donations, maybe consider doing it one large donation every 2 or 3 years rather than each year, because a lot of folks are filing standard deductions as opposed to itemized deductions, and they may not be able to take advantage of some of the incentives around giving if they do it every year versus bunching it. And then I think one of the other things to be really mindful of this year is fill up your contributions to your qualified plans. Now, whether you do that on a pre-tax basis and defer taxes, or whether you do it on an after-tax basis to a Roth account, that's going to depend on whether or not your income is in a situation today to be taxed at a lower rate than it will be in the future. Work with your financial advisor and your tax professional in making these type of decisions. So it's a great opportunity to take advantage and take some action right now, but make sure you're doing it in with the guidance of somebody who deals with this stuff day in and day out.
Well, thank you so much. I know it can be difficult this time of season to get that all taken care of, so we really appreciate your input. Thank you so much. Well,
thank you for having me.
Yeah, absolutely.
You've been listening to the 15-Minute Financial Feast podcast. Remember, every dollar has a purpose and every dollar has a timeline. If you have questions about today's topic, schedule a call with a team member. Visit www.mypt5.com. Until next time, be sure you're taking steps to retire with purpose on time. Mark Triplett is an investment advisor representative of and advisory services offered through Royal Fund Management, LLC, an SEC-registered investment advisor. Nothing contained in this program should be considered an offer to buy or sell securities. Different investments have different risks associated with them, and not all investments are appropriate for all investors.